Good morning, everybody. Good morning. Good morning. Good morning. Good morning, Coco. Welcome, welcome. Let everybody file in here for just a minute. Hope everybody's having a fantastic morning. It's supposed to be great weather where I'm at. Hopefully it's going to be great weather where you're at. Okay, let's go ahead and get started. Good morning. All right, let's go and get started, everybody. Thanks for joining us. This is Michael coming to you from Gamma Edge with our pre-market prep session on Thursday, March 5th. And as always, check us out at gammaedge.com. Like and subscribe on X and YouTube. Make sure you share our content, follow, and you'll be notified when we go live with any of our intraday content, as well as our post-market content and any other content that we post throughout the day. So let's go ahead and jump right into it. As always, we'll cover those three pillars of our trading plan, sentiment, structure, and trend. Sorry about that. So we'll start with our market trend model. Again, our market trend model is absent the noise and emotions of the overall market. It's based on the tick index, so it's pure buying versus selling in the overall market. Obviously, you can see it ignores the overnight gap downs also and just lets us know what market participants are doing in real time intraday. So the bolded white line is our intraday instantaneous cumulative tick. That lets us know if there's more buying versus selling, and if it's from lower left to upper right and above the shorter term, what we refer to as momentum moving averages or railroad tracks, then that's indicating more stocks are being accumulated than sold within the overall market. And then our longer look back period is our colored ribbon here. And if the red is above the cyan and trending to the upside, and as long as the white is above the colored ribbon, then our mechanical portfolios are turned on, which is our P-trans to PX strategy, as well as our wheel strategy. And all of that content is provided within our Discord, including the scans to mechanically enter those trades. And then all of our back testing with those trades is also included. So as of now, market participants continue to accumulate stocks, ignoring geopolitical events and ignoring what's going on. Again, this could change day over day, but as of now, we're seeing market participants still not be very fearful and continuing to buy pullbacks and accumulate stocks. Key takeaway here is new highs versus new lows. We did have one day of new lows outpacing new highs on the 52-week. Yesterday was fairly flat, but the key takeaway here is we've had 3 days of institutional buying across the board. This is our filter cumulative tick. Again, this is plus 1,000, minus 1,000 larger block orders filtered out. Again, most likely institutional buying here, but we've had 3 days of moving up of institutions getting involved in the overall market. Again, if this could change today or the next day, but as of now, institutions seem to be still accumulating stocks and not really worried about all the geopolitical events. And if the big boys and girls are still getting involved in the market, then that's what we'll do without emotion and just take the day to day over day. All right, moving on to our trading view market trend model. Again, you can clearly see that we've been trending up via our market trend model with slight pullbacks, just normal price action. And then you can see the ranges here. SPX, though, really has been stuck in a key range for multiple days. Sorry, that's the other top there. Just focus on the bottom here of our market trend model. It continues to move to the upside, indicating more stocks are being bought than sold via the market trend model and trading view. And you can also look at the background there. it is the gradient of when we see selling versus buying, and it's fairly green across multiple days. So market participants are still getting involved. All right, let's move on. The SPX, largest, most notional value options complex that we like to watch. Again, SPXA, we separate that from the SPXP, as the SPXA are the monthly expiries and institutional positioning. So we've aggregated the upper quartile expiries. This is 72% of the total OI with the next 4 months here from, and obviously heading into December, but the next 4 months are in the upper quartile. So again, we're going to aggregate that and give us key levels. So 6860 is one of those key transition areas here on the SPXA. You can see we're call dominated for the next few months into the early summer. So again, institutions are positioning for further upside, obviously up towards that 7,000 level, and then supportive on any pullbacks down into key levels. So this really hasn't changed. Institutions do not seem too fearful for extended positioning on out for the monthly expiries. So again, until that changes, we'll continue to put capital to work and continue to ignore the overall noise and just follow our data-driven option structure that we'll continue to do. All right, moving on, the SPXA delta balance. Again, this is separating the right-hand plane, which is above spot price, from the left-hand plane. I don't normally show this chart from the SPXA, but this gives us an idea of how market participants are positioning further on out in time, as we just reviewed on the previous slide about the aggregate. So we're seeing a negative slope in the right-hand plane. That's obviously the out-of-the-money calls, and we're below zero, so that is slightly bearish. But the in-the-money calls and out-of-the-money puts are above zero, as well as the delta balance is above zero through the March expiry. So again, upward price appreciation may be difficult, but we're not seeing the market completely fall apart and be extremely put dominated to the downside. And then the further expiries on out, we actually see an improvement in the right-hand plane, slightly above zero. But again, this is letting us know that we're not seeing a large improvement. So upside movement may be capped unless we see these out-of-the-money call speculation really start to ramp up. But then we're not seeing extreme fear in the left-hand plane. So the in-the-money call holders are not experiencing fear, and the delta balance is being pegged at 1. So again, we're not anticipating weakness into further expiries. That is not to say we won't have pullbacks, but we're not looking at a large pullback within the overall market is basically what this is telling us with the delta balance. And then moving on, the SPXA net stack command. This is the Greeks. Again, that's delta. I'll draw your attention to the delta level here. So in the money calls below us, in the money puts above us. This is what we call a locked horns condition. So upward price appreciation will be difficult above that 7,000 strike, which we've already laid out. So basically, this is just letting us know how market participants are positioned. Unless we see this in the money puts turn to in the money calls, most likely we're anticipating us to be range bound into the March expiry, and then we'll check this for further expiries once we get past the March expiry. All right, let's move on to the SPXP. Again, upper quartiles. This is through Monday. This is aggregated, and then the upper quartiles, 74% of the total OI. We used to refer to this as the full expiry, but we've updated this now to what we call the upper quartiles. So these strikes have the heaviest weighted net gamma on expiration. So obviously those will affect the structure the most. And we're call dominated above and below spot price. You see the two transition levels that are misaligned. So again, that leads to a little bit of uncertainty from market participants, but you see the net charm. As long as we're above these key levels as well as 6,800, we should continue to be supportive on any pullback. So we've talked about that. And then moving above the 6,890, obviously 6,900 overhead, that's a key strike that will most likely be a headwind. You see that large charm there from those out of the money calls, the call dominated strike there, and then move up towards 6,950. But you see the charm there from out of the money calls. So we'll have to have speculation come in to override this structure that's in place via the charm out of the money calls opening. Obviously, our book gets longer, dealer book is shorter. They have to buy to hedge to move us up through these key strikes. All right, moving on, the SPXP GEX ratio. Again, this is like a put call ratio, but we add a time component, which is gamma. Again, we talked about that historical bounce area where we got the bounce in the SPX, and then now we got a negative slope heading into today. This basically is telling us that the upside speculation is starting to degrade. That drove us to the upside on those 2 days of rebound. So most likely we'll see some stalling to the upside, which we're kind of seeing pre-market. So we'll see if this continues day over day to recover and this gets another positive slope, which would lead to price appreciation to the upside, or do we see this just chop around the 1 level, which is a theoretical balance point between calls and puts. And then we could see choppy price action on the SPX. So we'll continue to watch that day over day. All right, moving on the SPXP Delta balance. Again, same story here. Green dotted line is our right-hand plane. Again, that's above spot price. So it's kind of what I was talking about. We're seeing some degrading in the out-of-the-money call speculation. So price appreciation most likely will be difficult to the upside. And then that's dragging the Delta balance down, which is now below zero. So that puts us in a little bit bearish state. And then the left-hand plane will be supportive on pullbacks, even though it's negative. It's above zero. So again, that's call dominated. And you see projection on out in time into Monday. The right-hand plane improves. Left-hand plane gets a little bit more bearish and drops to the downside for out of the money put speculation. But we see the Delta balance drop below zero. This is obviously into Friday, the 6th, which is tomorrow. But then we see it recover into the 9th. Again, most likely we'll just see some choppy price action as upside appreciation is going to be difficult, but we're not having an extreme fall apart in the overall structure for a move to the downside. All right, SPXP net stack command for today. In the money calls below us, in the money puts above us. Locked horns conditions, as we just talked about. Price appreciation to the upside will be difficult. 6,800 to the downside, we anticipate that to be supportive. 6,900 to the upside, we anticipate that to be a headwind, unless we see intraday call versus put speculation coming in with significant volume to drive us above 6,900. So that's our range for today, most likely that we're anticipating, unless something drastically changes. And you can see those transition areas there where we could transition across those strikes and lead to a little bit more bearish or a little bit more bullish. All right, moving on the SPXP, 0 DTE. Hold on one second. I forgot to pull that up. And individual equities, if you want to cover any of those, you can go ahead and drop those in the chat, and we'll get to those in just a minute. All right, SPXP, 0 DT for today. Go ahead and pull up that. Okay, 0 DT for today. Obviously, we're call dominated to start the day, as I discussed on X. Heading into today, transition area is extremely wide. So again, uncertainty from market participants about positioning. 68.40 to the downside, key level. If we lose 68.40, we'd anticipate to move down towards 68.20. Bottom of drunken sailor range, you see all the charm support through those levels of those out of the money puts. As long as we're above those will continue to decay. If we lose 68.20, we look for a move down towards 6800. Again, large strike, charm supportive, most likely where we'd see some stabilization. So a long off 68.20, depending on what the intraday call versus put speculation is, would be the play back towards 68.40. And then for a move up through 68.40 through to 68.75. Again, if we see a rejection at 68.75, we're below that area there. 68.50 again is going to be key level to hold. That may be an opportunity to short. Above the transition area, we look for a move towards 6,900 with small longs. And then a failure at 6,900 obviously could be an opportunity to short for a move back down towards transition. And then above 6,900, we'll be looking for 69.40, 69.35, 40 up there, which most likely will be a stalling point. So that's the trading plan for today. Outline. Again, if we're in transition, let's see where we are pre-market here. So we're actually below the transition at 68.40. So we'd anticipate for a move down towards the bottom of DS at 68.20, unless we recover 68.40. If we're in this transition zone, we'd expect extremely choppy price action. So we'll watch 68.20 on a pullback as well as 6,800. All righty. Okay, let's go into some individual equities. I see a few posted there. App 11. Oh, that's not Apple. Let's go into APP. Okay, let's see if APP is there. Okay, so let's look at Friday's expiry, which is the upper quartile here. Call dominated on App 11, APP. PGEX is overhead at 500. INGEX is overhead at 510 though, so that's a structure that's flipped, so that's a little bit more weakened state, but pullback should be supportive. As you see, we have in the money calls below us. Let's go to the upper quartile. So everything looks good there. 500 to the upside. Again, call dominated below us, so most likely should be supportive on pullbacks on APP. Amazon had a nice bounce yesterday. Looked fairly constructive. I think we talked about that pre-market. So call dominated. Heading into Friday, 320 overhead will most likely be a cap on price. Pullback to transition could be an opportunity to get involved. Upper quartile, we actually don't see the next upper quartile OI until the March expiry there. So again, call dominated, 220 to the upside, most likely cap on price. Pullback to transition should be supportive even down towards 200 on Amazon. PLTR. Let's look at PLTR. Call dominated, looks good. 155 though, really close there on PGEX into Friday. So most likely that's your cap on price for upside speculation. Upper quartile, 150. So structure absolutely drops on all the upper quartiles. So PLTR to the upside, speculation may be a little bit reduced, and you see those overhead charm levels with those out of the money calls. And then you're above transition, so that's good. So should be supportive. It's just the upside speculation is not significant present there. So you see 155 on the monthly, 150 drops on the monthly expiry there. So, okay. Microsoft, let's take a look at Microsoft. Microsoft had a nice bounce yesterday. Friday's expiry, 410 to the upside. We're actually, so you see these double strikes here, opposing strikes, and we're at transition. So again, those should be supportive, but upside speculation is going to be difficult up towards 410. You see the charm continue to increase. So that's probably going to be difficult there. Let's do the quartile. So March expiry. So you see 9th, 11th, 13th, 16th, and 18th, and don't even play into the next or into the weighting of the gamma expiry. So really you're onto the March expiry there. You're call dominated there. You see spot price, but 400 there. You're within the overall transition, but the kind of a hodgepodge of structure there is really not clean and defined. So even though you have 575 up here, upside speculation for the upper quartile, you got a lot of overhead charm headwind to get through. So most likely going to be difficult there. So Microsoft looks good in general. It's just the structure on the shorter time frame doesn't look conducive of a large move to the upside. All right, TTD, let's look at Friday's expiry. Call dominated, structure looks great. You're way above, you're above PGEX now. And 32 overhead looks like that would most likely be your first stalling point overhead. Upper quartile, 60. So you see a large speculation up overhead, but the problem is you see all these in the money puts, right? So it's going to be difficult to get through. So you're going to have a large amount of out of the money call speculation start coming in to override all these puts. So you have to watch that watch that expiry over expiry. But upside appreciation is probably going to be difficult on TTD. Baba, let's look at Baba. I think it had a good move yesterday. Actually, no, it's weak. Put dominated, structures extremely put dominated. All the in the money puts overhead. You're below index, so that's risk off, and it's bearish. Structure doesn't change. Put dominated, 130 overhead. 130 is your key strike to get it above to have any chance to move towards transition, but extremely bearish. Should be supportive into 125 though, as those out of the money puts should allow you to stay above that charm level there. But Baba does not look good for upside appreciation if you're asking, or if you're shorting, either one. Qualcomm next Friday, 140 to the upside. You're in transition. You're at the bottom of transition, so upside's probably going to be difficult, at least up towards 140. Upper quartile, put dominated, weak structure. You're well below, or you're within transition, but well below that 140 strike. You see obviously a significant puts there, and then 145 is PGEX, but 130 is INGEX, so you have a large area runway to the downside. 130 should be supportive, but Qualcomm looks fairly weak to me. Not like the other stocks we looked at, right? Microsoft or Amazon, NVIDIA, Google, those stocks look good and structure still looks supportive. AMD, call dominated, 197.50. You're at transition. 205 is going to be the upside probably into Friday. Obviously, if the market cooperates, but market's looking a little weak this morning. Upper quartile, put dominated, overhead. You're below transition, so that's fairly weak. So 205 to the upside. And you see all those puts overhead at 210. So 205 is probably going to be your cap on price if you get a move up towards that area on AMD. Supportive down towards 190 though, and you have in the money calls below you, so those should continue to be supportive. But if you capture this 190, significant negative net delta there, large puts there also. So I mean, looks okay. Structure call dominated into Friday, but as you go out in the upper quartile, it looks fairly weak still. All right. Okay, thanks everybody for joining us this morning. Again, be watching the 68.20 level to the downside. We're below the 0DT transition and in the drunken sailor range. So that's where I would be watching for our first bounce. If we lose, absolutely, Brendan. If we lose 68.20, we'll be watching index down towards 6,800 key strike there for the downside. Most likely, we're just going to chop within the drunken sailor range today. Would be our overall thought process. And then we'll watch to see if any bounce, if we fail on any bounces to the upside there. At 68.75, you can just pretty much see that's that large hurdle where transition, 0DT transition, as well as upper expiry, full expiry transition is at, and as well as in trans. So it's going to be probably difficult to get over today. So that would be our training plan for today and our thought process. So, all right, thanks everybody for joining us. Again, like and subscribe on X and YouTube, and you'll be notified when we go live with any of our content. And again, check out gameedge.com. Click on the resources newsletter. You can put your email in. You'll be delivered free newsletter on the weekends with all of our thesis, all of our tools, and how we navigate the SPX option structure. Check out our free courses as well as our blog, and then of our products, our web app, swing trading, and 0DT trading, and then a pricing tab. Takes you to our Discord, 14-day free trial, all the tools turned on, extensive trading community with backgrounds from traders from all areas of the market. All right, thanks everybody. Manage risk as always, and make it a great day. We'll see you.